ESG ETFs, in terms of assets, they posted a rare drop in the first quarter after record growth. You saw assets decline about 2% amid weaker performance. And Bloomberg Intelligence thinks that there could be more challenges ahead because growth is not yet organic. To discuss that with us, joining us now is Bloomberg Intelligence analyst, ESG analyst, Shaheen, Contractor.
ESG assets have been almost on this exponential path, and this quarter, the first quarter, we saw this rare decline. So it was about a 2% decline, a small one, but a rare one. And what really drove this is a slight slowdown in flows.
Is there any relationship in the fact that, well, it was an ugly first quarter for the market entirely, and we did see, well, energy perform the best out of all S&P 500 sectors? I mean, I think that's fair to say, right?
Yes, definitely. I think there is a link to performance. So ESG, as we know, is a little bit overweight tech, underweight energy, and just not a good time, I guess, for ESG in terms of performance. So that's definitely one driver. But what's interesting is if you go back to COVID, I mean, the market rout was pretty tremendous in terms of a downward trend, but these funds still took in flows in 2020. So this is actually the first time we've seen that slow down. So most probably, yes, a link to this performance angle.
And Shaheen, you write in your report that a wider investor base will be needed to sustain growth. But I mean, if ESG is potentially headed for a continued rocky period, if we continue to see tech under pressure, energy outperform, is there any chance of that happening, that investor base being widened, if performance isn't really crushing it?
That's actually a good question. So I think the slowdown in performance is sort of still going to drive things, at least over the short term. But I think over the long term, we are seeing small signs of this widening investor base. Though I would have to say still that's the main challenge faced. Sort of if you have one large of allocations that come in, which is what sort of has catapulted this asset growth, what happens when that asset faces one outflow? 90% of the fund's assets get wiped out. And that's actually exactly what we saw.